Hi, everyone, and welcome to the Buffett and Beyond Research Saturday Market Recap Letter, October 14th, 2023. And remember, folks, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And this week, well, the market rallied on lower interest rates, then fell toward the end of the week, or I should say toward the end of Friday, as tensions increased over in the Middle East. And everybody seems to be saying, oh, this is going to expand. And so there are worries relative to the auto workers and their strike. Bottom line is the market is confused between the Middle East and between the strikes that are going on, causing possible wage pressures, which means the Federal Reserve will be looking to raise interest rates. But a lot of people are saying, no, the raise in interest rates are just about over. And our weekly stock analysis video, well, Fortinet is in the cybersecurity business, but has had a difficult time as sales have slowed down to 18% per year. Now, folks, don't get me wrong, but most companies would be doing backflips if they had sales growth of 18%. But you know what? In the case of Fortinet, the market wants even more. And our ETF video, well, the semiconductor ETF is having a difficult time, but our top stocks in this ETF, and there are 5 of them, going on 6 maybe, are up over 50%. The hedge portfolio we formed is up 41%. Now, this ETF itself is up only about 13%. So either way, we're killing the market and we're killing the semiconductor ETF with our top stock picks from this ETF and hedging those stocks. So you've got the best of all the worlds, folks, here. And let's just look at the market this week, and you can see we had that big downdraft in here, and finally the market stabilized in here, then went back up to the 20-day moving average and has been testing that every day, and on Friday closed right at that 20-day moving average. And the reason, see, the market was up about, and I'm talking about the Dow now. This is the S&P we're looking at. But the Dow was up 326 points at one time during the day and then wound up closing up about 36 points by the end of the day. Why is that? Because people are worried what's going on in the Middle East, and they said, hey, we have a profit here on Friday. Let's sell our stocks. We'll come back Monday and see what happens in the world situation. Down here, we have a little buy signal, and this is the intermediate term indicator that we use for our portfolios. And right now, we're in a buy situation. So as long as we have that, in other words, the blue line over this red line, then we are in a buying mode, or at least a steady mode. So our growth portfolios are fully invested, folks. And even though we have the day-to-day fluctuations, overall we're looking at the economy becoming better, and the interest rate increases are just about at the end, or maybe even at the end, and we'll be going slower, but we have a plan in place because all the stocks in our growth portfolio are, guess what? They're growing, and that's what we want. And as long as those companies do good, we're right there with them. And let us look at a closer look of the S&P 500. And yeah, we had this buy signal about 2 weeks ago in here, and then the market came down again, but did not break this bottom line. And as long as you have higher lows, and this is what we did, then you have a buying situation. And then we got this beautiful rally in here, and then we topped out a little bit. So here we are. Let's draw a line all the way back here, and you can see, yeah, we're looking at this area right in here, which was a point of resistance at one time, and now it's a point of support. And even when we had the big downdraft in the market just 2 weeks ago, we were down at one of these levels that was resistance way back here at the end of May and the beginning of June, and provided support. Red line right down here, 200-day moving average, very, very important point in the sand. And we went up, and then, of course, Thursday we had some increase in interest rates. This is this line right here. And then Friday, it was like, okay, we're here, but the weekend's coming up. We don't know what's going on in the Middle East. We don't know what's going on with the strikes relative to the auto industry. So let's just sell our stocks and we'll come back here on Monday and reevaluate everything. And so that's where we stand right here, folks. We are at this point over here. We have support at the 4,300 level, and Monday, with some of the trades that we took off, also, yeah, we're part of that group. On the trading portfolios, we took off our trades on Friday, and we'll get back in Monday, because usually Monday is a down day. That's a good time to get into your individual trades when we're talking about covered calls or we're talking about spreads on the SPY, and the SPY represents, well, is the S&P 500 ETF. So we take a few positions on those, and that's just to pay for our portfolio insurance. Now, before we go on, if you want to see what's going to happen Monday and Tuesday, just sign up for our two-week free subscription, because we send out a market letter every day, and then you'll see exactly what we're doing on Monday and if we take positions heading into Tuesday and the rest of the week. But what I was talking about before, we do a little bit of trading in the portfolios in order to get enough money to buy put protection. And this is insurance. When you hear about puts, they're usually buying insurance in the market. This is about a $135,000 portfolio, and we have 3 SPY puts sitting here. So if the market drops another several percent, we are fully protected to the downside. The market could go to zero, and these puts will protect us at the 410 level. And so in order to get money to pay for that insurance, because all our other insurance is going up, our home insurance, our car insurance, and so we have the insurance in the market. And folks, we use some short-term trades in order to get the money to pay for those puts. So yeah, we're happy with these puts right now, and market tensions around the world they do bother us, but they don't bother us relative to our stock portfolios because we are protected. So, folks, we had a weird week this week. We had interest rates dropping in the beginning of the week, and then toward the end of the week, more trouble in the Middle East, and that's bothering the market. So the market is confused, and that's why the sell-off took place on Thursday and then Friday. Thursday with higher interest rates, and then Friday because people just didn't, or the traders, I should say, just didn't want to be long during the weekend. And for our long-term portfolios, we're fully invested, and we do have some protection on that portfolio. So, folks, you go out this week, forget about what's going on, go for a walk on the beach, walk on the golf course, stay with your family, watch television, have a good family meal, do whatever you want, but take your mind off the market, because guess what? It'll be here on Monday. So take care, folks, and most of all, stay safe.